What is going on, guys, and welcome to part 3 of our 3 video series on how to mark up charts, price action basics, and getting into trades at the proper time. Today we're going to be going over the third video, which is actually getting into the trades using risk management and how to figure out when the best time or actual entry is for this particular trade. So, without further ado, let's hop into it. And if you haven't watched the first 2 videos, I suggest watching those 2 first before you watch this one. All right, so right now what we have here is GBP CAD. We went over how to mark up our charts. On the 4-hour chart here, we've marked up our support and our resistance zones. And then now we move down to our 1-hour chart. The 1-hour chart is where I take most of my entries. Now, this is for a couple reasons. One, the 1-hour chart typically gives you a couple hours worth of a trade if you're looking to trade that style of swing trading. And two, I feel that it's a lot more clear than the smaller time frames. Smaller time frames tend to have a lot of noise and a lot of movement that can be kind of unpredictable and it can fake you out. Whereas the hour seems to be the easiest to read based off the 4-hour. So we've jumped to the 4-hour and then jump back down to the 1-hour to look at our entry. Today we're going to look at a trade that we took last week, and this is a buy on GBP CAD. So again, going back to it, we have our support and our resistance zones respectively here in yellow. What we're looking to do is take a buy off of a reversal. Now, there's 2 things that you can look at here. You could have taken a buy off of the reversal right here and gone for a decent amount. You could have taken a buy and went for 60 to 70 pips. That would be a fantastic buy. But for me, I would like to see more than one confirmation candle to know that we're actually in a buy and the market is moving toward the upside. So what I would do is wait till we see a break of structure and then a retest of a new zone. So what we need to do first is mark up what our next area will be. We have a new resistance and support being drawn in right here. The reason I say that, a couple things. One, this was working as a resistance for pretty much almost 24 hours. It was working as a resistance right here, as you can see. Now, it became a support when we broke through it right here and came back down to retest it and drive forward. Now, what we would look for in an entry is strong rejection of a support. We got that right here on these candles. If you're to take a look at this on a little bit tighter of a view here, what you can see is that we had 1, 2, 3, 4, 5, 6 candles, 6 hours of rejection off this new support. That was our previous resistance right here. So it was our previous resistance when it was right here, and it's our new support right here. As you can see, we had these candles all respecting the support. Now, what we're talking about is when to get in. So when we would get in on this trade, after we saw this long wick and we saw this 1-hour full bullish candle, we could look to take a trade off this retracement, which would be right about here. So we figured out now that we found a reversal at a support. Now we want to look at where to enter. We're noticing that we do have a full green bullish candle. Now, that is a massive indication that we are no longer in this retest zone and we're going to start to move toward the upside. So we would wait for the 2nd-hour candle, which would be right here after the original green bullish candle. We're going to wait for this second one, and we're going to see what happens. There's typically a wick halfway down the previous candle's body, which is exactly what happened right here. So we'd get in somewhere between this area right here, between the 1.84664 and the 1.84585 area. That's where we'd want to get in, is somewhere around right here. It doesn't have to be exact on the hour candle. You're going to see some movement. You may hold some drawdown. You may go into profit right away, but that's what's most important. So now that we've decided that we're getting in our trade, where is our stop loss and our take profit and our targets going to be? So ideally, you'd want yours to be at the bottom of the support, your stop loss. So like we talked about, we had almost 6 or 7 hours of support right here. If we wanted to be very cautious with a tight stop loss, we could go to the previous lows of the bodies of the candles here. Now that would be a very cautious stop loss. And I'm going to go ahead and mark that here so you can see it a little easier. That would be a very cautious stop loss. It's pretty tight. It doesn't really give you too much room. From entry, it's about 11 pips. Personally, on the hour chart, I think 11 pips is too tight of a stop loss. What I would want to see more is probably the bottom of the longest wick that rejected our new support zone, which would be right here. And I'd go a couple pips under that. Don't want to get caught in a liquidity sweep. So what I would do is mark it right down here. As you can see, this would be our lowest low. Let's move it down a little bit underneath. There's our stop loss. Now, in terms of our take profit, I typically do 3 take profits when I take trades. Reason being is there's typically always some sort of key zone or key area where you're going to see a little bit more rejection or some resistance in the market movement. Then the take profits that I would use here, your TP1 is going to be even with the previous high, which I pretty much always do. We're going to go ahead and make that green because that's a take profit. Our take profit 2 is going to be even with the next previous high, which is right over here. There's TP2. We can go ahead and make our line there. And TP3 would be all the way at the top of the zone. Now, I'm going to say that I typically do not wait until TP3 unless we close a certain percentage of trades. Now, you may be asking, what does that mean? So, if I am in a trade that is 2 lots, right, I can close a percentage of my trades. Now, I can either enter multiple times and close these smaller trades, or what I can do is close a percentage of trades. In this case, after we hit TP1, I would close 25%, which would be for 13 pips right here. Would be 13 pips in profit on a 2 lot trade, right? So I'd close 25% and I'd send that out and I'd let everyone know close 25%. We now have 75% runners and we'd move our stop loss to break even. I want everyone to understand that. That is a very, very important key when it comes to risk management. We're going to move our stop losses to break even or use a trailing stop. What that means is now that we are already 13 pips in profit and we have taken profit of 25%, we're going to go ahead and move this up to our entry point. Couple reasons for this. One, now if it comes back to our entry, no harm, no foul. You didn't lose money, you didn't make money. Also, it protects your account. If you did enter more positions on the way up, it protects you from blowing an account or over leveraging your account. Now, in this case, we never had it come back to our original entry. As you can see here, we really never had it come back. It just kept going and kept going. So, after we hit TP1, which we already said was 13 pips, TP2 went for 51 pips. At that point, I would say we close 100% or close 75% of your trades and leave one trade as a runner or 25% as a runner. This is when you'd want to use a trailing stop. Now, the trailing stop in this case would be you would move this higher than our original entry. Our original entry was down here. Your stop loss is now above your original entry, and you're guaranteeing yourself profits in this zone right here that is above your TP1 and above our original entry. That is going to be the smartest way to trade and guarantee yourself profits. So I want everyone to understand that once you understand how to get into a trade, and once you're in the trade, you also still need to manage the trade. And managing the trade can happen in many different ways. For one, you can use a trailing stop. For two, you can move all your stop losses to break even. That way, it is a risk free trade. Or three, you can actually enter more positions and scale on the way up. You could continually enter positions here. You could enter another position here, but you'd want to make sure that you're either A, taking profits, or B, not over leveraging your account. And that is something that is so crucial and so important to trading. And this is what I see happen over and over and over again with new traders and advanced traders, is that they fall in love with a trade and they continue to enter over and over and over again in hopes that they're going to hit a home run. I've said this before, it's all about base hits. It's all about making contact. It's all about taking profits, small profits, bit by bit, to create that larger account. You don't want to over leverage yourself. So, with that being said, I appreciate everyone watching part 3. If you learned something and this video helped you out at all, please make sure to like and subscribe. I think this 3-part video was very informational, and I hope to continue to see everyone in my lives on Sundays through Thursdays. I trade the Asian session, and then one day a week I trade the New York session. So again, thank you guys, and make sure to like and subscribe, and I wish you luck on your trading journey. Click the link in my bio for my Discord if you'd like to join. Have a great day.